Hi, good afternoon, everyone. So, in the last class, we were going ahead and we were talking about instruments of money. And we have already gone ahead and we have already talked about, few instruments of money, which is the quantitative instruments. Today, we are going to go ahead and we are going to take this further and we are going to talk about the qualitative instruments, right? So, and you remember this that we also have to do the hybrid instruments, right? So that's the agenda for today. That we want to go ahead and we want to do these two type of instruments, right? Further, further, we also want to go ahead and we also want to see why and when these instruments are used in the economies. That is another thing which I will be going ahead and I will be focusing on, right? So let us go ahead and begin. So please write down the topic for today. Let's begin by talking about the qualitative instruments. Now, what is the definition we wrote yesterday? Beta, kya definition tha? We said that quantitative instruments are generic in nature, right? They apply across uh, the sectors, right? But when we talk about qualitative instruments, right, then they are selective in nature, right? That means they focus on a particular sector of the economy, right? So, qualitative instruments, right, beta? So, these focus on allocation of credit and are more discretionary in nature. Right, beta? So one of the qualitative instruments that we have that is called as credit rationing. Let me give you one example, right? So consider that you have a loan market. How does the loan market look, beta? Demand of money, demand of loans for that matter, supply of loans. Wherever the demand and supply meet, you have equilibrium interest rate and equilibrium amount of loan. This is your loan market. Now, what we are saying is that suppose the central bank imposes a limit on this loan, right? So what it is saying is that the maximum loans that can be given out in an economy is L bar, right? We have put a limit and we are not putting limit as a whole. We are putting limit on certain sectors. Just say, for example, if I put a limit that anybody who is dealing in cryptocurrency, right, जो भी firm cryptocurrency में deal करता है, for that firm, the maximum loan cannot exceed this amount, right? So I am not going ahead and I am not imposing that as a whole. I am going ahead and I am imposing this, this limit only on a particular sector कि लोन मार्केट में जो हमारा क्रिप्टो करेंसी वाला इंडस्ट्रीज होगा उस पे देयर इज अ लिमिट दैट द मैक्सिमम लोन्स दैट विल बी ग्रांटेड विल बी दिस मच, राइट? सो व्हेन दिस हैपेंस बेटा, that is when we go ahead and we say it is credit rationing. And because it is in a particular sector, क्योंकि हमने एक particular sector में इसको apply किया है, therefore we go ahead and we can say that it is selective in nature. It's not generic in nature, right? So please write down central bank imposes limit on credit extended to certain sectors, right? For example, speculative sectors, right? It helps in curbing asset bubbles. So, for example, if I go ahead and if I think that, in housing industry, there is a bubble that is getting created, like the one that was there in finance during financial crisis, 2008 financial crisis. I think that, everybody is getting a loan, even when their credit score is low. Okay, and I want to put a limit on the credit that can be given in the housing sector, so that, you know, a similar situation like 2008 does not repeat itself. So in that case, what I will go ahead and what I will do is that I will put a limit that housing sector में इससे ऊपर credit नहीं दिया जाएगा. Right? That is what is the first part. That is what is called as your credit rationing. The second one that we have, that is called as moral suasion. Moral suasion basically means it is basically a way, again, it is basically uh, for selective sectors, it is where your Reserve Bank of India is communicating with the banks, right? To align with their policy goal. तो अगर रिजर्व बैंक ऑफ इंडिया के दिमाग में है कि यार मेरे को मनी सप्लाई इससे ज्यादा एक्सीड नहीं करनी है, तो बैंक्स को एक परसुएसिव वे में कम्युनिकेट करेंगे कि देखो, इससे ऊपर हम सप्लाई को इंक्रीज नहीं कर सकते इकोनॉमी में, तो इससे ज्यादा लोन नहीं देने चाहिए, राइट? सो बेसिकली दिस इज नॉन स्टैट्यूटरी इन नेचर, right? This is based on the trust between the central bank and the commercial banks, right? But there is no formal regulation as such in this. As the word suggests, morally pursuing someone, moral suasion. आप morally किसी को बोल रहे हो एक particular चीज करने के लिए, right? So moral suasion is basically the persuasive tactics that is used by central bank or by the government to influence the behavior of the commercial bank कि इससे ज्यादा लोन मत दो, right? But there is no, this is not statutory in nature. This is non-statutory in nature, right? So please write down. Moral suasion refers to the persuasive tactics used by central bank or government authorities to influence and guide the behavior of financial institutions and market participants without use of formal regulation or coercive measures. So this is not formal in nature. It's like on a level of relationship, the RBI is telling commercial bank what to do, right? Like request or appeal, right? So it relies on legal binding communication, such as requests, appeals, or guideline, rather than statutory tool like interest rate or reserve changes. तो पहले ही हमने बोल दिया कि ऐसा नहीं होगा इसमें, दैट देयर विल बी चेंजेस विच विल बी फॉर्मल इन नेचर, कि नहीं इतना रिजर्व आपको हमारे साथ रखना ही रखना है. Not like that, huh? This is non-formal in nature, right? Again, this is also useful, right? If I want to advise the limit in the real estate sector again, ठीक है, तो मैं कम्युनिकेट कर दूंगी कि देखो इससे ऊपर लोन मत दो रियल एस्टेट में, राइट? या जैसे sometimes there will be a public statement made by Reserve Bank of India governor which will request banks to maintain adequate capital buffers. हाँ, तो उसमें गवर्नर ने आके कम्युनिकेट किया कि देखो कम से कम इतना कैपिटल अपने पास रखो, लोन में मत दो. नॉट फॉर्मली, इट्स नॉट समथिंग which you have to legally abide to, but the governor has just given out a statement. The governor just appeals the bank to do a certain thing, right? So this is what is this moral suasion. एक अच्छी बात इसका ये है that it will be always flexible. You are just requesting them, right? So it can be used any point of time without formally bringing something into it, right? And it can be quickly employed. जब एकदम से लगा कि नहीं एक request pass on करनी चाहिए हमें, it can be quickly employed. Quickly you can go ahead and you can do that, right? Okay, beta. Now let us go ahead and let us talk about the next one, which is basically called as direct action. Third, direct action. Direct action means so this is very similar, but now what the RBI is doing is RBI is bringing a policy, but with some punitive measures. Like RBI is going ahead and saying कि अगर आपने ऐसा नहीं किया, हाँ, जो हम आपको बोल रहे हैं करने के लिए, तो उस केस में हम आप पे फाइन लगा देंगे, राइट? या उस केस में हम आपका लाइसेंस ले लेंगे, राइट? सो इट इज a punitive measure taken by RBI, by central bank, to enforce its monetary policies, right? And it simply says that if you, so now it becomes legally binding. ठीक है, ऊपर वाला legally binding नहीं था. So now we are going ahead and we are saying that if you don't go ahead and follow this, then we are going to go ahead and we are going to take a fine from you, or we will you know take away your license to bank, right? So that is what is direct action. So please write down direct action refers to the coercive or punitive measure undertaken by central bank such as RBI to enforce its monetary policy by taking action directly against non-compliant financial institution. The action can be, so what actions can you go ahead and can you take? The action can be anything like taking fine, cancelling license, etc. Right? So now this becomes legally binding, right? And this is aimed at correcting the undesirable banking behavior. So if you think कि नहीं banks ठीक से behave नहीं कर रहे हैं, so you can correct their undesirable behavior through this kind of instrument. Like, right? Last one, beta. Fourth, changing margin requirements. change in margin requirements, right? So what do we mean by a margin now, right? There are multiple definitions of margin when you talk about the the money economics, right? One one meaning of margin is this, the one that we did in the last class. This is also called as a margin, the upper bound and the lower bound difference. This is also margin. Okay? But and it's also called a corridor. But we are not talking about this margin, right? We are talking about the difference between market value of security and the maximum loan that can be granted against it. So, for example, there is this person. He goes to the bank and he says, "Give me loan." Why he wants a loan? Because he wants to purchase a flat worth 3 CR, 3 crore. Now the question is, how much loan can the bank give? Usually, earlier, it was 80% of this value. 20% had to be the down payment, which you had to do yourself, right? Sorry. Now, what has happened is that instead of this 80%, you can only get 70%. So the maximum that can be granted will be 70% of this 3 CR. जरूरी नहीं है वो 70% मिलेगा. It will depend on your CIBIL score. It will depend on the income that you have and other loans that you have taken in the past. But this is the maximum that can be granted. 100% kabhi nahi milega, right? So when the value is 3 CR, right? And suppose maximum loan that you can get is 2.1 CR, 70% of it, then the difference between these two, that is called your margin. Okay? This margin can change with time. कल को गवर्नमेंट आके आरबीआई आके बोल सकता है कि नहीं मैक्सिमम आप सिर्फ इसका 50% ही दे सकते हो. That means it has increased the margin, right? The volume of credit that it can be that can be given out has fallen. अभी आप credit दे रहे हो 3 minus 2.1, right? I mean you're giving credit worth 2.1, right? You're not giving credit worth 0.9. Now, tomorrow, if the government comes up and says that you can give maximum credit of 1.5, it has increased the margin. You're not giving credit worth the remaining 1.5, right? So, margin is the difference between market value and the maximum loan that can be given. And when the government fluctuates this margin, it means that the loan that you can give will also fluctuate. The more the margin, that means the more the gap between this and this, the less the loan that is given out. The less the loan, the less the credit, and hence money supply in the market. Right? So please write it with me. First, let's write the definition of margin. Margin is equal to market value of security minus the maximum loan that can be sanctioned against it. Right? Now write down. A change in margin requirement is is able to change the volume of credit in the market. Right? I'm just writing higher margin requirement implies lower loan value, implies reduced credit availability. It implies reduced credit availability. Okay. So this is what is your margin requirement. Okay. I hope all the four are absolutely now clear to you what these four